All right, let's bring in our next guest. It's Mr. Craig Bolanos. He is a co-founder and wealth advisor at VestGen Wealth Partners. Good morning, Craig. Thanks for coming on the show.
Hey, Scott, I can't wait to get some government data whenever this thing opens back up because what a difference between what ADP told me about job creation and what Challenger told me about job destruction this week. It's enough to give you an outer body exorcism.
Yeah, I think I don't know what to say about it except for the fact that 32 versus or 30 versus a 42 whatever the number was, I thought it was paltry no matter what. And with all the headlines that I'm seeing about these big companies laying off people, I was not surprised by the Challenger Grand Christmas one. And there was an even a bigger shock to the system. I don't know. I'll have to see if I can find it because I know I definitely saved it for myself. But over the next 8 years, Amazon plans on cutting 500,000 jobs for AI and robots.
Well, I think it's just started, right? I mean, we just have to understand that ADP is measuring something different than
Yes.
Challenger, right?
Yeah,
I mean,
yeah.
ADP is doing private sector growth. Challenger is doing announced job cuts, right? I'm not going to get into that difference, right? But those of us who are nerds on Wall Street, we get it. But I remember when I said about 8 weeks ago, so I'm going to take credit for this, that by the time we get to the end of the year, that headline unemployment number is going to be topping the 4.5% mark when we were at 4.3 when we closed. I now think that's right. And Scott, I got to be honest, I don't want to be correct because the theory has been that the reduction in employment now through early 2026 is going to be about freeing up money, capital expenditure to be placed into AI, and then the real job loss is going to come in 2027 from the AI replacing the humans. I think we're on a one-way path to that actually occurring, and that's why people need to be investing in everything that AI can't replace and everything that artificial intelligence can't reprice.
It's well said. I mean, here's the article. Amazon announced plans to eliminate 500,000 jobs, 500,000 jobs, while investors poured $11 billion into growth stocks. That's the disconnect that Wall Street celebration and worker displacement has never been starker, and that's what you just highlight. So 500,000 over the next 8 years. That doesn't surprise me. We had somebody on the show, Nancy Davis. She's fantastic. She's ex-Goldman Sachs. She's got her own fund now, but she came on 2 days ago. And most of the people will hedge on my show a little bit. They'll say, yeah, we're going to lose a lot of jobs, but there will be some jobs that come about from it. She said basically, absolutely not. She says those jobs that we're going to lose to AI and robots will never come back. But here's the thing.
I agree with that. I got to jump in. This is our version of the Industrial Revolution.
Yeah.
I mean, it makes the energy renaissance, the internet, growth, the PC revolution of the 80s, all three of those big seismic events, they all just were job shifters. This is not a job shifter. This is job destruction.
Yeah. But, okay, it's not okay because you don't want to see people lose their jobs. But I don't so I posed this to another real smart guy from Laffer Tengo yesterday, Art Laffer. I said, I see a 5% 10-year, a 5% unemployment rate, and a 3.5% inflation number in our future. What do you think? I think that's hard to argue with. I mean, I agree with you about 4.5 for sure with the unemployment rate, but I think we can see that unemployment rate get up to 5. I think that the 10-year yield is going to get angry with the Fed cutting the short-term rates, and then we're going to see inflation because the Fed's going to try to fight those job losses with rate cuts, and we're going to see inflation, get above 3.25, maybe go to 3.5. So 3.5 is my guess on inflation. My 5% 10-year and 5% unemployment rate are also out there, and I think that's going to maybe have all the Fed heads they're going to be spinning.
I think the job losses are going to come. I mean, everybody knows that we're eventually going to get back to a 5 to 5.1 and then higher unemployment rate.
Mm-hmm.
That's undeniable. Artificial intelligence does that. It's just a matter of how long it takes to get there. So 4.5 by the end of the year. Could you see as high as 5 by year-end 2026? Yeah, it's definitively possible. As far as your inflation data goes, no, there's probably some real underlying elements to that, but I think it's going to be interesting to primarily see what comes out of the Supreme Court relative to trade and how the administration's going to go ahead and respond if the big court upholds the lower court ruling. Longer term in that 10-year, no, I don't want to see a 10-year Treasury knocking down 5. That has all sorts of negative implications for our ability to borrow a country, everything else. slowing things down. So, I mean, that is not financial Armageddon if all three of those things happen. I just hope that maybe only 2 out of the 3 happen, and then as Meatloaf would say, hey, 2 out of 3 ain't
bad. Yeah. Well, I tell you, the Fed has don't listen to what they say, watch what they do, and they've decided to fight this job loss issue. And I get it, because generally speaking, in the old days, when you start to see those job losses cascade, you want to get out in front of it, because turning the job situation around is a lot harder than turning an inflation situation around. So I think they've turned their back on inflation. If they're still willing to cut interest rates with a 3% inflation number and stocks at all-time record highs, that's telling you right there that they're going to turn their back on inflation and they're going to fight jobs. But I think that the jobs fight they're going to have is going to be futile. I think they're going to struggle, and I think that that's why you're going to see more cuts, and you'll see the inflation really start to take off, and that's when you get those 5% numbers and the 3.5% I'm talking about.
The Fed can't fight the jobs. It's a tsunami that's coming. What they can do is slow it down, though, right? They can stimulate to slow it down, because remember, it's never about the change itself. It's about the pace through which we experience that change. That can be applied to an interest rate discussion for Fed speak, right? That could be discussed as everything in life. It's going to be about the pace of change. But I think what everyone should really start doing, since this is also an investment show, is focus on future-proofing. So go into the weekend, go into the end of the year, and start asking yourself, what can I invest in that AI can't replace? What can I invest in that AI can't reprice? And then more importantly, think about, I'm going to say it, remember a guy named Andrew Yang in 2016, Scott, who had a button on his lapel that said, it's just math? And he talked about universal basic income coming because of artificial intelligence. That was 9 years ago on the Democratic primary. Boy, he might just be right.
Well, if UBI or universal basic income is still an option, I think we've lost the whole battle there, because that's a road to nowhere, if you ask me. It's never worked. It won't work, but we have to figure something out.
I'm not in favor of it. I'm just telling you where things are going. You mentioned your 3.5 and 5.
Yeah.
5.
Well, I'm
saying, hey.
I might throw that in my hypotheses. You're right, because we've got this Democratic Socialists of America, the DSA, or the Social Democrats of America, SDA, however you want to price it. They've been talking about both of those initials on the news, but that's gaining steam, because these people are they're priced out. Things are unaffordable. They're not making the money they thought they would, and now here come the job losses. You might be right. I think that this socialism wave gets traction. I really do, because of a lot of the electorate is just fed up and had enough, and they don't see any light at the end of their tunnel, which is unfortunate. But and by the way, before we go, I'll say this from a guy that has been displaced. I'm not trying to be heartless when we talk about these jobs going away. My job went away after 25 years. I did one thing. I yelled and screamed in a pit and traded. I only knew how to do one thing, and that job was taken out from underneath me. And you have to go find a way to reinvent yourself. That's what you have to do, and it's sometimes very difficult, and you're not going to make the same money from one thing to the next, but you can start and you can build something later. It's never too late to jump ship and try something new. But I tell you, I don't take that lightly, because it happened to me, and it's something that folks need to really kind of take a long look at. I agree with what you said about investing in something that it can't replace or reprice. That's great stuff. Appreciate you coming on.